Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 22nd of July 2011. This will be the third week in a row on Fridays and also Saturday on the radio show that we have had the trend as long. Good week. When we look at this technically, we did hold support on a close. If we were to break at this point basically the 1305 range or the low that was put in on Tuesday, for us, that would be an indication to get out of our long positions and start to hedge. If we were to get short, if we did break 1305, 1300 net level, we would have our stop right around 1345, 1350. But as it stands right now, the overall trend is long. We got through this first area of resistance. We came down very hard, so it was not quite clear to see whether or not this was a fourth wave, kind of a retracement, and then this would be a continuing fifth wave. Still want to get through 1350 on a close, which would be resistance. If we get through that, that obviously increases the probability that we're going higher. But very good week. The telling day was really Tuesday, when the Dow, I believe, was up right around 200 points. Monday, we closed off the lows, but we did trade below the 30 and the 50-day moving average. We did trade as low as, I believe, 12.95 on the cash. We closed above that, so some people might have been shaken out that had hard stops. And then Tuesday, we broke above this declining, sloping trend line here. We also got above the 50-day. Volume picked up, so that was a signal to get long if you weren't already long. What I like about that is the distance from there to, let's say, your stop around 1300, 1305 is pretty tight. A little bit of nothing yesterday, or I should say Wednesday, a big day on Thursday, and very little activity today in terms of volume. But the overall trend looks good. It looks long. Again, we want to see the lows that were put in on Monday hold. All right, worst case scenario, this 1295 level. So we still remain in this trading range, but for now, the odds favor the longs, at least as of the close today on the 22nd. Let's take a look at the cubes, QQQ, and this is NASDAQ. This looks a little bit better. This is a daily chart here. You can see we broke out above this, kind of a cup and handle, if you will. And when we look at this on a weekly basis, on a weekly chart versus a daily chart, you can see that we've surpassed not only on a close but intraday highs here, 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 here. So we closed above that today at 59.60. So the NASDAQ right now looks like the most probable out of the four, meaning the Dow, S&P, Russell, and obviously the NAS. So the NAS looks good there. And some of the managed accounts, we've taken a percentage and doubled down, some on the S&P, some on the NAS. Again, we want to hold 1305. We'd probably want to hold basically, we want to hold definitely this week's candle. We would definitely sit up in our seat if we broke 59.53 on the cubes. And obviously if we broke this area of support here, and then also the 50-day moving average on a weekly basis. Let's take a look at this again on a daily chart, the QQQ. Yeah, we'd want to first initially hold this 57 level here, which I believe is probably, maybe 3-4% back. All right. Let's take a look at gold. We do have, not everyone in this, but we do have selected clients in this. We started to hedge a little bit here in anticipation of filling this gap, but not only that, but also at some point coming down and testing the breakout area like we talked about last week, maybe somewhere between 150, 152. With today's action, we have reduced that hedge. We were always more long than short here, but now we're really more long than short. We do have some individuals here, more aggressive clients that are in the First Majestic Silver, and I believe we sold 50% of the position here, and then we have a stop that we moved up to 22 and change, 22.07. So this little silver trade so far has worked out, even though it only represents a small percentage of the clients and a small percentage of the account value at that. We do have a position, throw one more G on it, AGG, which is the Aggregate Bond Fund iShares. This is still holding up. I'd like to see it close above the high that we put in on the 19th, which was 107.66. If it breaks down much further, then I'm thinking it's going to probably go fill this gap down here. We will probably exit it, even though that's a small percentage back. That might be a place to raise some cash. We can always get back in if it holds and trades above these highs that were put in basically on Tuesday. What else can we look at? We do have a couple individuals that have been in Apple since we broke above this little trend line here. So that's worked out well. I do anticipate, like we talked about on the blog on the 22nd, this gap being filled, but overall the chart looks good. I think this will continue to be a tradable stock, provided you have the discipline to know when to get out. Let's take a look at Microsoft. I also like this chart. You can see we broke out of this little base here. We have talked about this on a weekly and a monthly chart. I don't think we're too far extended here. When we look at something like McDonald's, that was a big move up today, although we did close at the lower end of the range. We may come back down and fill this gap. I think last week we talked about Coca-Cola as well. You can see we got above this high here. That was a technical signal to buy. I don't think we're too far extended there. I would have my stop right around the 50-day worst case scenario. I'd be parked under this low that we put in on the 18th of July. That low was 66.59. From a percentage standpoint, that's not too far away. All right, you guys, that's it. Doug McKay on the 22nd of July. The overall trend is long. Maybe we get a little bit of a pullback next week. I really like so far, hopefully I won't jinx it, but I do like the NASDAQ 100. I do like the cubes. Looks very good. The Dow looks good too. Let's take one more look at the INDU. This chart is not marked up too much, so it's very clear. Again, we get above this level here. You could make a case for this being a cup and handle. I wouldn't mind seeing a pullback, but we get above this level of right around 12.725, 12.730. It's technically very strong. No way to fight it. You got to go with it. Put your stops in place in the event that it's a false breakout and it rolls over. All right, you guys, that's it. Thanks for viewing the blog all week, listening to the radio show. The charts are going to be limited next week because I'm going to be on the road, so it'll be mostly just copy as opposed to still charts. We'll see you next week. Thanks.